What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. If you're watching on Twitter, please give us a retweet. And if you're on YouTube, hit that like button and hit that subscribe button so you never miss an episode of the Futures Radio Show live streams. We have a great guest for you today. He's been on the podcast before. He also has a great podcast, one of the podcasts that I listen to regularly called Alpha Mind. And his name is Stephen Goldstein. He's a performance coach. And what I want to talk with him about today is something that I think is so important, and it's the steps in developing mental edge as a trader. What do we have to go through to get to the point to where we develop that mental edge and actually see how that has helped our results as traders? We will be taking your questions live, so please be sure to drop your questions in the YouTube chat. So if you're watching on Twitter, hop over to YouTube if you want to put any questions in for Stephen and myself. Before we get to Stephen, I want to remind all of you that micro ETH futures are now live on CME. They're 1/10 the size of 1 ETH. To learn more, go to cmegroup.com. Futures Radio Show is also sponsored by CME Group, Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 future symbol RTY and micro E-Mini Russell 2000 future symbol M2K. To learn more about FTSE Russell and their products, please go to FTSERussell.com. My man, Stephen, what's up?
How are you, Anthony? Good to be on.
Great to have you back on the show. Thank you so much for doing this live. I know it's a lot different than doing them recorded. We're going to get some questions from all of the listeners out there today, so I appreciate you taking the time for joining us live today. And today I want to talk about, like I said in the intro, just developing mental edge. You're a performance coach, and you work with a lot of top people in the industry, a lot of traders, and you help traders get better with trading psychology, get better with mental edge. I want to take this back to the beginning because the question I get a lot from traders is, Anthony, you talk about mental edge all the time. And I had this conversation with Merritt Black on the show. I know he was on your show. It was a great show of yours with Merritt. And he had said to me, he goes, Anthony, if everybody just goes and studies with the Dalai Lama and then goes to trade the S&P futures, they're going to run into a little bit of an issue, right? They need to have statistical edge first. They have to have other things before they can start to develop mental edge. So what I want to discuss with you, and I agree with that, is to a trader out there right now that's just getting started or has been trading for a while, what do you think the steps are for them to get to the point to where they can start developing and recognizing how mental edge is actually a thing and helping them as a trader?
Yeah, it's quite a difficult thing. I mean, I like to look at trading as something where, try to imagine it with three lenses that kind of all overlap slightly. And one of them is this knowledge and technical know-how lens. One is your risk process and risk philosophy lens, and one is your ability to manage yourself, your self-management lens. And these three lenses all kind of overlap. Now, really, you have to be developing all three together. But what happens, and quite understandably, is we want to know what it is we're doing and how to do it first. So that lens, which is really the knowledge and technical know-how lens, gets nearly all the energy and all the effort and becomes inflated and a lot bigger. And very quickly we'll understand what trading is, we understand what markets are, we'll understand systems, we'll understand products. We can build those technical skills, which we all go to first, quite quickly. But we've left the others behind. We haven't developed our risk process, we haven't developed our risk philosophy, we haven't developed a structure around how we take risk. And then we haven't developed the skills to be able to manage ourselves through that process. We haven't understood, the uncertainty and the complexity of the markets. Markets don't ever work the way we think they're going to work. So we come to it the wrong way. So it's really about learning in a way which is all three of those lenses. But you do, paradoxically, as I'm saying that, need to know the basics and the foundations of it first, which is the knowledge and the technical know-how, and then you start developing the other stuff as you go through that.
So take us through it. You have a trader today that comes to you and says, Steven, look, I know that at some point I want you to be my performance coach when I get to the level of really being able to develop that mental edge and to really hone it in. What would be the advice you'd give to that trader to say at this point right now, this is what you should be focusing on before I think maybe even you and I have a discussion?
Right. Well, I would say, first of all, get out there, practice, get some experience, get a feel for it, see what you're doing well, what's not doing well, what you're not doing well. You need to get beaten up a little bit, first of all. You need to get some bruises. You need to know what you're up against. If you go in there and you've just made money straight for a year, and you're in a bull market, it feels pretty easy. But you don't really learn until you get punched in the face properly and knocked down. And that's what you need to have. You need to have some adverse experiences. So I very rarely work with people with less than one, generally less than 2 years experience. Yeah. I want them to have something that we can talk about and explore together.
And this is so important because I think that when we look at education for traders, there's only so much that could really be taught. And I think the things that you can be taught are really just the basics about function of markets, like what is a bid and offer, what is a limit order, like those things. I feel like obviously you need to understand those, and that to me is where I look at trading education on the onset as being very important. But being able to tell somebody how to trade, teach someone how to trade until they've actually had 1 to 2 years of experience. And I know that kind of sounds bad, meaning that you come into it and just have to kind of go out there. But I think you have to do that in order to recognize who you are. What time frame do you want to be on? What markets resonate with you? You like markets that are super liquid. You like markets that aren't really very liquid. High vol markets, low vol markets. I mean, what times do you trade? Because then you have to then narrow it in into your execution, and then you can develop a strategy. So I think that what you said is it's so important for people to recognize. The first thing is really just doing it, right, Steven? Like actually going out there and doing it, and probably just putting some sort of risk limit out there, because most likely you're going to lose it. I mean, I know I went through this. I lost all of my first 3 accounts, but and being able to get the experience to then be able to pull it back and then do what would you say the next step would be?
It's a great way to think about it is to think about it like you would with sport, how you go around learning a sport or maybe a musical instrument. You just start by doing it. That's the first thing. You can't really be taught it. You have to learn it, and it's a strange thing. So if you want to play tennis, if you want to become a boxer, you practice at first, you play around a bit, you get some experiences, you maybe have some good experiences, some bad experiences, and then you think, I really want to learn how to do this, and you go to someone and they're not going to teach you, but they're going to work with you, and they're going to help you improve your game, and they're going to help you work on different parts of your game, and they're going to help accelerate your growth. And this is one of the challenges of trading. It takes many years to start becoming profitable, to start getting to the point where you can consistently rely on your income. And if it takes too long, you're going to run out of time. So you want to accelerate that growth. I mean, that's why a lot of people work with coaches, to accelerate their growth. And also because it's a constantly evolving, changing and adapting environment. Someone could be really good for 5 to 7 years or even 10 years, and suddenly the market environment changes and suddenly they can't make any money. So it's almost like they have to relearn. And that's a constant evolving process with traders. So, again, some of my guys I'm coaching are 20, 25-year veterans that, they want to adapt, they want to learn, they want to get better, they want to grow. It's a constant evolving and emergent process, trading is. But that is it. You have to learn it. And you work with someone as a coach who supports you through that learning process.
I love the line that you said, and I'm going to take this line. I might be tweeting this line somewhere down the road. It was so great. You can't be taught it. You have to learn it.
Yeah.
That tells you so much about trading, because it has to be learned. It's something that you have to go out there and do in order to be able to become good at it and successful at it. you can't be taught something, even though it works. Let's just say statistically, you've been taught something that works very well.
Yeah.
You can't just go out and execute it and think you're going to make money. I know this from personal experience. I'll never forget all the times I'd be in the pit or around, all great traders, and I would watch other traders do things and make money, and I would almost try to mirror them, and I would still lose because somehow I would screw it up. And I'm like, how can I be around all these people making millions of dollars and I stink? I mean, what is the problem here? And it's because of that. You have to learn it. You just can't be taught it.
Yeah, you've got to adapt it. You can take somebody else's system, but that system contains their personality, the bits that you can't see and the bits that they're not even conscious of. So you've got to then take that. And I had this with somebody I worked with a few years ago who went to learn from a great trader. And he had a very simple system, this trader. And he said, wow, I'm just going to execute that system and go and make money. But he couldn't. It didn't work. And he went back to the guy and he went, well, that's because you're not me. There's things about me that I don't even know that are in that. So how can I possibly? And then that won't work for you because you're you and I'm me. So whatever I give you, you've got to think, well, how can I take that into something that works for me? There's got to be an adaptation there.
I mean, 100%. I went to your Twitter page right now, and your pinned tweet, I think, fits perfectly into this conversation. You said, I want to be a pilot, learn for 5 years. I want to be a lawyer, get a degree, then learn for 5 years. I want to be a boxer, practice for 4 or 5 years. I want to be an athlete, practice for many years. I want to be a trader, start tomorrow. Any guesses why so many fail?
Yeah, that is it. We're doing it the wrong way round. And people are attracted by it. They think it's something that's easy. They've looked at the market, they've seen it go up, they've heard of a friend who's made it. This guy over there doing crypto is now a millionaire. And they're thinking, I can do that. It doesn't work like that. There's a lot of people I know who are amazing. Do you know how many years it took them to become amazing? And they make it look effortless. It's far from effortless. They've spent years. They appear like an overnight success for some people. They spent years becoming an overnight success.
Exactly.
So it is so difficult.
I want to continue on what we're talking about today, where we talk about developing the mental edge, because I think at this point we're looking at experience. We're going through a period of self-discovery, self-awareness as a trader. What is it that we like? What markets that we like? We both know that at some point you have to develop some sort of statistical edge. I don't even know that it necessarily has to be. I mean, I think maybe we'll talk about this next. I don't think that you actually need to find something that is 80% profitable in terms of the numbers on whatever it is that you would run. I've said this before. I think that a more confident trader will make more on a 50-50 win rate than or let's talk probability win rate on something that you're looking at on a system versus someone who's not confident on an 80 or 90% win rate, because they don't believe in exactly what they're doing. I've had so many trades that were wrong in terms of what I thought would happen, but I made money because I was confident in executing my system. Talk to us about that, and do you agree with me? Do you feel differently about that?
Yeah. I mean, obviously, let's put a systematic approach aside.
Yes, agreed.
That's one thing. But let's look at, say, a semi-systematic approach where you get signals and you still have to turn them into, you still have to monetize them. Or if we go with a fully discretionary approach, that's the other way around, where you don't necessarily have something is going to work, but you add value to it through the way you manage yourself and the way you express yourself in the markets. There's something which I call psychological slippage, which is a concept which came from a trader I worked with many years ago who, he kept a very detailed record of all the trade ideas he wanted to put on. He was a player in a hedge fund. He'd been there for 3 years, and I got him to do a what-if scenario. What if he'd put on all his ideas, if he'd run them to the way he wanted to do, if he'd have taken stops where he said he was going to stop, if he'd have done the size he planned to do. And it produced the most amazing results. I think it was about a 40 or 45% return. But during that whole time, he'd achieved an average return of about 3 or 4% a year. So that difference was money left on the table. And that difference was pure psychological slippage. He knew how to make money. He understood the markets he was in. He had a great analytical process. He had a great way of finding value. Okay. The difference was that he couldn't monetize those ideas. And that is what I call psychological slippage. It was fear, it was greed, it was emotions being taken over by the market, not having enough structure around process, not being able to size properly, holding on to old beliefs and ideas rather than clearing your head and starting again and analyzing everything as a fresh, with a fresh mind and fresh eyes. There is so much more. I mean, that's just the tip of the emotional and psychological iceberg there. But all those things were happening. And, he lacked structure. He'd come from the sales side in a bank where, when you do it in a bank, it's done very differently to how you do it in a hedge fund. And that was a big part of it. And he had to readjust to that new environment. So it was, how could we redo? Everyone has psychological slippage. Okay. It's unless you're doing it systematically, no one doesn't have it. But it's how can you reduce it? How can you lessen it? And you only have to do it a little bit. He was never going to return 40, 45%. That was ridiculous. But, if he could get himself to 10%, he was going to be one of the top average performers there per year. So it's just, where can you tweak it? That's where the opportunity comes from.
Yeah, you put this tweet out this morning. Your morning. Well, actually, yeah, about 9 hours ago, I'm looking at it. It says psychological slippage is the difference between what you could make if you could monetize your approach free of emotional interference and what you actually make. It's almost impossible to reduce psychological slippage yourself, which is why professional traders work with coaches. What is the steps that you take as a coach to help people with this?
Right. Okay. So there's a number of elements to it. One is, first of all, getting to understand them and getting them to see themselves more clearly. So creating greater self-awareness about who they are, about their context, their situation, how the situation they're in comes to impact their trading. But also, sort of reveal how they trade. I also use a number of models, which I've developed myself, which I take them through, which helps them understand their process more clearly, helps them make sense of the market they're in, so they get a helicopter view of what they do, and they also start to examine it internally far more clearly and sort of understand how the realities of markets and the uncertainty and the complexity impacts their decision making. And then we start drilling into that. We start drilling into, kind of unpicking it, and then what steps can they do to improve those things, as they become more aware of it. FOMO being one of the most obvious. Why is there FOMO? It's not just fear, it's because they lack a clear playbook quite often, and they lack an ability to have a structure in their playbook and lack an ability to keep to principles which are part of their playbook, and they just trade off the top of their head, and then they become owned by the market. You have to own what you do as a trader. If you let the market own you, then you're in trouble. If you let the volatility of the market own you, you're in trouble, and it will own you at some point. We're all human, but the less you can let the market own you, and the more you can own your process and the way you apply yourself to the market, the better the better your results will be, and that is reducing that psychological slippage.
I want to take it back to almost like this timeline that we're talking about, where we talk about developing mental edge. Like I said, from the beginning, and just to keep going through this experience, developing some statistical edge, like I said, doesn't necessarily need to be that you find something that's 80% win rate. Then you get into that next phase. Because I think there's a lot of traders out there that are on this, that are like right there. I remember being there myself, where I was like, I could taste that I was right there, but yet I kept coming back down. I'd just be like, oh gosh, I would do all this work, make a bunch of money, feel like I was there. Then all of a sudden I'd get in this rut, and then I'd start giving it back. It would frustrate me. And then once I had less money in my account, I kind of just almost throw in the towel in a sense, and then almost feel like I'm starting over again. And I feel like because so, at least for myself, I wanted the results so bad right then and there. And when I was doing well, I wanted to like just get over that hump right there. And I know a lot of traders are probably saying I feel like I'm there right now where you're just right there. And I think that's where the mental edge starts to come in, to just hang in there, right? And be strong to figure out how to get over that hump. I know that everybody's a little bit different, but I think you could picture in your mind where I'm saying where that trader would be. What would you talk to that trader about getting over that hump?
Well, we need to know really what does that hump look like, first of all, and then we need to explore that hump. A lot of people try to go around the hump. If you go around the hump is just going to reappear again. You have to go into it. You have to kind of dance with it. You have to surrender to it and explore it. And that's what we do. I as a coach, my whole process, which is, it's evolved from psychotherapy. I've studied various forms of psychotherapy, and I still have supervision and coaching from psychotherapists to make sure that my process is as strong as possible. But one of the key elements is that if you have patterns which repeat themselves and keep coming up, they're going to keep coming up until you do something about it. And a lot of people say, well, let's do this to go around it and avoid it. No, it's going to come up in some other way. So it's stay with it, explore it, work with it. I've had some great results from clients over the year. These aren't things that can simply be dealt with in 1 or 2 meetings or even 1 year. We keep coming back to it year after year after year. And they get a little bit better with it, and they get affected a little bit less by it. But it's not something that can just be dealt with. If we go back to that analogy of sport, if you're a marathon runner and you've got to a certain level and you want to get another 10 minutes off your time, it's not going to come with incredibly hard, detailed work and sacrifice and spending time. And it won't happen overnight. It's going to be months and months of work, of detailed work, not just running, but gym work, working with trainers, and you might get there eventually. The hardest bit, like you said, is you're almost there. Anyone can run a marathon. Anyone can get to a certain pace. The hard bit is that extra little bit once you're there. That is where the really tough part is. And that's the same with trading. It's where you know how to do it. You've got a structure around it. You understand markets. You understand how you work. How do you stay that extra little? How do you get that little bit better? That's what you need to get over.
I think a big part of figuring that out comes down to journaling. And how do you help traders as a coach to recognize if it is statistical issues with their system? Is it the mental edge? What is it? How do you look at that person and say, that thinks that they're right there and people are saying, yeah, I can relate, to be able to say, okay, this is what it is. I mean, what do you need from them? What information? Because I think this is important that these traders are doing proper journaling to identify what the issue really is to fix it.
I can tell you that myself. I used to keep a trading journal. I don't know if you can see me. I've got a load of old trading journals over my shoulder from when I was a trader. And I remember 1 year going back over them and reading through what I was doing. I used to just write occasionally a comment, sometimes no comment, sometimes quite a lot. And I would review what I did. And I noticed this pattern that I just looked at one trade and I thought, I must have made money on that trade. I'd written out an idea. I remember what the market did. And I realized I didn't make any money on it. So I started, well, why the hell did I make it? I called it perfectly. I said, this is what I'm going to do. And I didn't do it. So I looked back at the trades and I could see exactly what I did. I started trying to move my buy level when the market came down to it to try and nick a few extra ticks. Okay. Classic mistake. I came down to my level, but it never came to the new level where I tried to. Now, the new level was put based on some really solid analysis. As the market came down, I got a little bit, it's trying to be clever, trying to be cheeky. And then I ended up chasing it. buying it at a really bad level, which didn't fit with my plan. Market came down and I ended up cutting myself out, losing money on the day when I should have made a load of money. Typical action that used to happen to me. And I'm like, I didn't even know this. How did I not know that? We're blind often to what we do. We think we know what we do. We don't. That's why journals are so great. Okay. So I started looking through and seeing if there's any more examples of this. And I started finding them all over the place. You know, I'm like, this is crazy. I'm not even aware I'm doing this. What is going on? And then I'm like, well, now I've got to do something about this. So there's two things come to me. One, actually, I'm really good at calling these levels in this type of situation. And two, I'm really bad at executing them because I get a bit nervous when the market gets close to them. I try and grab a few extra ticks and then, you know, try and be clever with the entry and the stop, miss out, end up chasing it, which is a terrible thing to do. Okay. And then you're not trading a plan, your risk reward's screwed up. So I'm really becoming conscious that I'm doing this and I'm doing this and I'm good at this. And now I'm going to adjust my process and start trading differently. And I made a journal point of how am I getting on with this? Because just saying you're going to do it doesn't fix it. You have to work at it. And I worked over many months to get better at this. And I would do a review every week in my journal. What have I done well? What could I have done better? What do I need to improve? And this was in that last bit. What do I need to improve? And eventually, over time, it got into the top bit. It was, what did I do well? Well, I did really well at staying with the trade when the market got close to it. But it took many months for it to move up there. And then new things got into the bottom bit. What do I need to improve? So there's a lot of ways you can use your journal. It's a really powerful tool. You know, it's the starting point.
Do you believe that traders should be more cognizant of weaknesses, strengths? Does it matter? Combination of both? Because I feel like so many traders out there try to only look at their weaknesses and they're not looking at their strengths enough to maybe do more of what they're good at and try to eliminate, you know, the weaknesses by doing things more that they're good at. What are your thoughts on that?
Yeah, 100%. You know, we all have this tendency to look at our weaknesses, and we all have a tendency to call our weaknesses flaws. They're not flaws. They're just how we are. You know, we have strengths, we have weaknesses, we have situations where we are going to be better in, and we have situations where we're not so good in. You know, I wasn't good at running long-term risk. I was good at generally quite short-term risk up to a few weeks. Okay. It's not a flaw. I wasn't made to trade like that. And if I tried to trade like that, it would never get the best out of me. I was very good at drilling down into things in a very detailed way and finding, I suppose you could say, things that didn't quite line up. You know, that was my edge. So, you know, find what you're good at. And then I started building my process around that. Now, if we just look at what we're bad at and not what we're good at, all we do is we'll spend time getting slightly better at losing money, okay, and not get better at making more money. When you look at your strengths, that's your source code. You know, that's what you need to get into. That's what you need to find, and then that's what you need to build into your process and system. And actually, your strengths can help you overcome your weaknesses as well, so that they then become, you know, as I say to people, go where you're strongest. Now, if you're not good at long-term trading, don't do long-term trading. If you're not good at writing options, don't write options. You know, but you're obviously good at something else, probably. You know, if you're not good at, you know, some people are very good at trading off the top of your head. There's a reason for that. Do it. You're probably very good intuitively. You know, you back yourself up with that. Put some structure around it. Don't just do it without structure. You need some structure around it. You know, some people are brilliant at pattern recognition. That's kind of what I mean by, we call it trading off the top of the head and we don't value it. It's internal pattern recognition. That's what the guys you were probably working with on the floor all those years ago did.
Yeah, I mean, we got a lot of traders in the YouTube chat. I mean, you guys put some of your strengths and weaknesses in there. I'd like to actually have a discussion with Stephen about this. We've got him here maybe to help us work through them. I'll start with mine. I'm very open about it. I mean, I look at myself when I looked at my strengths and weaknesses, and you nailed it when you said that you start building things around, you start building structure around those for your strategy. for me, my strengths were I was able to press, take advantage of situations. I love to click in. The problem, one of my weaknesses was almost the same thing. It was pretty much the same thing, to where I would just always want to be in the trade. Big time FOMO, right? I can never miss a setup. And then another one of my weaknesses would be that if I missed a trade that was in trend, that I would be turning around and all of a sudden trying to fade trend to look for a few ticks back within it. So I had to put things into my trading to prevent me from exactly what you said, finding more ways not to lose money, that I was just doing stupid things and I needed visuals to stop me from them, and to do more of what was working for me. So if I really wasn't afraid to pull the trigger, I just put multiple confirmations. And when something really lined up that I liked, then I would just step on it. And then when the situations weren't that great, I said, you know what? I'm missing this one check mark right here. Don't do it.
Yeah. It's not easy though, because we have that kind of compulsion within us, almost an addiction sometimes, to wanting to do things. We have an addiction to wanting to be right. That's a very human condition. And, most traders are very competitive. They want to win, they want to be right, but sometimes that becomes win at all costs, which is really unhealthy.
Yeah.
And often the cost is your process or your structure. So it's kind of, the more you become self-aware of where you're strong, where you're weak, where you can overplay your strengths. A lot of that is overplaying strengths. That's what it is. It's, you're good at finding value, you're good at identifying the trend, you're good at leaning into that, and then you think, you know what, I'll go the other way. You're not so good at that. And but by that point you feel you're wrong. So you think you're going to do that. I had a guy a few years ago, and I tell this story often, who was a brilliant day trader in FX. But he'd identified that he didn't make money in the afternoons, UK afternoons, after 1 o'clock. And, I used to say, so he said he doesn't trade after 1 o'clock. He's in there at 6, he's working till 1. It's a long day already. He's burnt out, he's spent by then. He said his ability to stick to his rules, to stay on side, to not get nervous, not get owned by the market is diminished by then. So he doesn't trade in the afternoon. So I said, well, he works in a way that's discretionary, but he has favorite signals and setups he likes that work for him. I said, what happens if you have a really good signal and setup in the afternoon? You're missing out on that. He said, yeah, I get that. He said, but I sacrifice that because I tell you what, over time, I will lose money in the afternoon. And at the time, you can't pick and choose which are the good signals and which are the bad ones. So even if I get one of the good ones, I know over time I will lose if I trade in the afternoon on aggregate. So just better off not trading. I could do my reviews then, plan for the next day, understand the structure of the market, journal, do whatever, but, work on a system, which he was working on as well in the afternoons, learning Cobra, so lots of different things that you can do to make your most efficient use of your time,
Yeah. No, and I can relate to that because I was really a terrible afternoon trader myself. The only times I would actually end up trading the afternoon as my career went on would be like end of the months, first day of the months. Maybe I'd watch to see some things happening on the close in my scalping days. But exactly what you said about that trader was you had to sacrifice a potential good setup in the afternoon. And I just felt that for me, I was most sharpest in the morning. I felt that time of volatility, the way the market was making the range for the day was the best time for me to trade. And when I would come back, good or bad days, I most of the time would just end up over trading. And even at the days I would make more money, I would be commissioning myself into a hole. So it would look like I made more in the P&L, but on paper I was actually not. So I think that's where you have to really be honest with yourself and look at your journaling and say, look, this is just not working out for me. And like you said, and I thought that was so nice, so good the way you put that, just to sacrifice something for the greater gain of yourself. We've got a lot of really good things. I think that you're going to have some fun with these, Stephen, because there's people are putting in a lot of questions about this. And let's go to Let's see what they say. Well, I mean, this is a question I get all the time, and people are always like, Anthony, one of my weaknesses is cutting winners too fast. So is mine. So I wish I could hold them lower, but Vlad's asking this question. I think it's a great question, the first one to start off with.
Okay, so it's again, this is where you've got to learn more about your process. You're probably cutting winners maybe because you don't have a sense of, is it going to be a long winner or not? I need to grab it. I need to hold on to it. Okay. If you don't know where is your optimal profit taking, if your system is, I'm putting my entry here and this is my target. If you don't have a target or at least an exit rule, you're just going to exit off the top of your head. And then it's important to know really, what is the relationship between my winners and losers? I had a trader who I coached who decided to go back and look at 5 years worth of his trades. And he found that only 5% of his trades turned out to be winners. Actually, this guy was featured in the most recent Market Wizards book. So I'll give you an example of how successful he was. But he realized there's an awful lot of trading going on there, which is costing him money, which is just pointless trading. If he can get his winners to 10%, and remember, he was making a lot of money when he was even at 5% winners. If you get 10%, so if he could cut some out because they're not part of his process, they don't fit in them. He's taking trades which doesn't need to be taken. And also, what's the optimum level to exit? Should I stay with that trade? If I cut it out, I'm not getting the maximum potential from that trade. And what it means is, you'll get rid of some that end up being losses, but you'll also end up with a lot more big winners. And you have to understand, what is the balance? This is where you do some analytical work. If I look at my trades over time, and that is psychological slippage. That's a great example of it. You don't have enough structure in your process. You don't know what's the optimal level. You don't know where to exit or entry. I still trade now. A lot of my trades don't make it. They're in the money, but they don't make it to my profit targets. I allow them to come back to entry or to a revised stop or even to a loss. That doesn't matter because it's the process over time. And out of those, some that I allowed to go to winners go a hell of a long way, and they would never have got that far. And I know that those few winners that go a long way end up making up for all the losses and all the ones that basically all the losses, or the ones that I never took profit and they ended up being losses.
Yep. We've got a lot of them, Stephen. So I want to try and see. Probably got another 10 or 12 more to get through. So I want to just stay on this one just for a quick second and move on because my thoughts for Vlad are, and what I've done, because like I said initially, this is a weakness of mine as well. I think it's pretty much every trader struggles with this. What I have done is implemented, instead of targets, especially on swing trades, is more of a trailing stop method. So this way I never will get, that perfect top, and you just have to get that out of your mind where like, oh, if it hits your target and then it comes off of it and then it's like, oh gosh, and then you just hit the bid. If you're long, I've started to implement using simple moving averages. And I know it seems so boring. And like, well, geez, how is that going to help me with any sort of edge? But it's actually helped me stay in trades that stay in trend. And you can make them as short term as you want. It's just a visual, once again, to where it's like, okay, instead of having that target on that swing position, you can start saying, if it can't hold this, then, I'm just going to get out. And I think that's just something that has helped me. And Stephen talked about that as well. So I just wanted to just say, put something in the system that makes you get out instead of just focusing on the targets. It's helped me. This next question's from Johan Benad, revenge trading. It's his weakness.
Could spend hours on this one.
I know that's why I was like, I don't want to spend too much time on any one of them because I've got about a dozen to get to, but this is a good one.
Do you know what? I don't really have. I have a tool, a model I've created called the trading process cycle, and I take my clients through it. And we have a tendency to fall in love with ideas, like as if we fall in love with a beautiful girl, and then she ditches us. What do we want to do? We want to get revenge. It's a human thing, or we feel hurt. the same things that play out in life play out in our trading. We feel hurt, so we end up just doing something, and really the revenge is on us. Remember, the only person you're hurting is you. The only person you're competing against in trading is you. The market doesn't care.
No.
The market is just out there. It's like the sea, it's like the ocean, it just is. Sometimes it's calm, sometimes it's rocky. And we are competing against ourselves when we trade. This is the big challenge. This is the person who is our ally and our enemy. And we're fighting that person all the time. And sometimes, like, one side of us wants to almost take revenge on the other side. And we end up doing something just for the hell of it. We go off process. I'm going to show you. Who are you showing? You're showing yourself. It's a really strange thing. I mean, I've done so many revenge trades over the years. I don't do them anymore. I haven't done them for years. But in my younger days, when I lacked structure, when I lacked process, when I was just trading off the top of my head, it's a strange thing. It's a really odd thing. You couldn't describe it to anyone who doesn't trade. I know that much. I probably haven't helped you only because it's such a complex answer.
No, it is.
Topic, but
I know. I think you answered it great, and I think that the best thing that I took from that answer is that you're only revenging against yourself, and if you think that way, you're not getting revenge against the market. And if you know that you're only hurting yourself in that next trade, I think that could potentially cause a pause before you hit that button.
Yeah,
One of the things.
The problem is we're not at that point. We are not thinking straight. We've already lost. We're already owned by the market. That's that whole point about ownership.
Yeah.
We need to own everything we do. And if we don't own everything we do, if we don't own what we're doing, we're owned by the market. Okay. And we've already lost by then. That's why that guy was saying after 1 o'clock, he doesn't trade. He doesn't always make money in the morning. He loses money, but at least he owns those losses. Okay. But in the afternoon, he's got very little ownership over what he does. The market increasingly owns him. And that's when he's going to lose money, even if he gets a good signal. So this idea of ownership this is central to successful trading. When I meet traders who are incredible, and I've got some incredible traders I work with, they do things that you're like, wow. And it's their attitude, it's their philosophy. They fully own it. That's what makes them great traders. And they would do things that you think, not always good things, it's getting out of things. It's stopping is the hardest thing. Is when you stop, you don't think you're wrong. You still think you're right. That's the point. That's why stopping could be so hard. You think, I'll take it off for a little bit, I'll move it back. Or it comes back and you get straight back in, and then it comes down again. How often do we do that? Because at that point, okay, the market is owning us. So when you stop properly. And this, some of these guys are just brilliant at stops. It's what makes them so great, and they won't rush back in. They know the value of them. And they're not always stops, they're exit strategies as well. Doing the hard stuff, right, or trading, like you said, getting that extra little bit when you're almost there is so hard, and it's getting over those behaviors. That's the extra mile you have to go. Changing almost your default processes, bringing in process and structure to what you do. That's how you get over it. Then you're less owned by your emotions. Like you say, your trading stop is a brilliant way of being less owned by your emotions. It's in the money. I'm still making money with it. And if it gets stopped out, so be it. That's it.
Yeah.
I've got some profit, and maybe it'll keep me in for the long run.
Yeah, get me out. I mean, the minute I get into any trade, I want to be out at my target. I don't know anybody who doesn't feel that way. I don't love sitting on holding positions, right?
Yeah.
And what has taught me patience within a position is just get me out. I want to get out, right? And I'm a busybody, right? So I'll click, and this is why I've not been great at holding winners, and that's why I was really a scalper for a lot of years, and I had to retrain myself as a more of a swing trader now to find a way to just get me out. Don't let me be sitting there just waiting for that target, because then I'll watch it'll get 2 points away from the target. Let's just say in the S&P, and I'm like, do I cover them here? Do I work some? Do I start scaling now? I take a lot of that decision making out, and I've actually become more relaxed by implementing something like that. One last thing I want to say about the revenge trading, that in my experience, something that I have done that has helped me is if you've revenge traded, and we've all done it, and you feel that pit in your stomach, that disgust with yourself, think about the next time. Think about that the next time before you hit the button. Because to me, I use that emotion and that disgust with myself as a tool to prevent me from clicking the next time. It's not perfect, but it's something that I do. And I'm like, do you really want to do this, Anthony? I have that little conversation with myself. So for what it's worth. Wow, a lot of good questions on here. I like, let's go to Tom Hellpenny here. Stephen, he's saying strengths are good entries, weaknesses, cut and take first loss. Propensity for counter trend trading.
Okay. So
I think what we'll talk about here is really how could we help Tom in getting what could we discuss that would, I think, help him and maybe getting a little bit better with his strategy.
It's an interesting thing because a lot of people mix counter trend trading with contrarian trading. Okay. I had a brilliant trader on the podcast earlier this year called Jason Shapiro, or Shapiro. I'm not sure how you say it in America, but it's Shapiro here. And he is an incredible trader, and he's a contrarian. That's what he is. But he made a hell of a lot of money being long of the NASDAQ over the last year. And I was a bit puzzled by that. And I said, well, surely that's not a contrarian trade. And he said, no, that's complete contrarian trade. He said, most people were out of it. They weren't in on that trade. He said, so I was mixing up counter trend and pro trend with contrarian. So he said the contrarian trade was to be in the NASDAQ earlier this year because most people wanted to be in it but weren't or didn't believe in the rally. And he was using tools such as, sentiment indicators, commitment of traders, those sort of things. And it's by the way, the Crowded Market Report he's one of the guys behind that. It's worth checking out. I don't know if I should be advertising other people's stuff on here, but so just being counter trend for the sake of counter trend is dangerous. It's just thinking I'm just going to go against the trend. If you have a reason to be contrarian, a lot of people make money being contrarian traders, then that's different. But it's not always counter trend. I don't know if that helps him. But some people are just counter trend for the hell of it. It's gone up a lot, so I'm going to sell it. That's not a trading strategy. It's gone up a lot, but actually it's hit a resistance, and I think it could come off from here. That's a reason for selling it. It's overbought, it's looking tired, it's going to be a correction. That's a reason for selling it. Not it's gone up, so it's going to go down. I don't know if that's what he means, but it's a big mistake a lot of people make.
I love how you define that because I think that's important. And I think, hopefully, Tom, that helps you with your strategy. But I agree with you, Stephen. There definitely is a big difference with that. There's another question here from Johan. He says, weakness is not being able to step away when market is chopping.
Yeah, absolutely. It goes back to that analogy of the market being like the sea. If the sea is rough, you don't go out in your boat. Plain and simple. There's a good chance you won't be coming back. If you're not someone who likes huge volatility, and we get these extreme markets, the discipline is not playing. If you're someone who likes volatility, on the other hand, great. In fact, stay away from calm markets. Try not to do too much there. I know people who just give money and bleed during calm markets. So, it's trying to understand the environment you're in and what is the best time to trade. Is there a time where 60% of the time you lose money in a certain condition? Warning, don't trade that market. I saw some, I'm putting together an article at the moment for my blog, and I've got some data from FXCM where they say 60% of their clients lose money in FX after the third or fourth hour of the market, of the day, of that market. It means that, but they make money in the morning. It goes back to that thing. FX and their FX day traders, first 3-4 hours, it's a good time to trade markets. Next 7 or 8 hours, bad time to trade market. So if you just trade for those 3-4 hours, you would have a much better success rate. But there's people who believe I have to be here all day. Why? It's like you're being paid to sit there and lose money after the 4th hour. Or you're paying for the privilege of losing money after the 4th hour. Don't play golf.
Go spend money. That's what, it's because I think so many traders confuse like work ethic. When you come from a 9 to 5 or you come from something, you have to sit there and you have a boss and you have production levels that you have to reach in your job. And you think because you're a trader and you're at your screen, the more time you're trading or the more time that you're at the screen, the better you're going to become.
Yeah.
And although you do need to spend a ton of screen time, I totally get that. I've done it. But I've also learned that you aren't going to get better results just because you think you work harder by staying at the screen all day. This business just doesn't work like that. So I think psychologically, going back to like developing mental edge for Johan that asked this question is, when it's like that, recognize it, accept it. We all know when it starts getting choppy. So I want to move on to this question from Vanessa. How can you tell if you are being disciplined because your setup wasn't there versus falling into perfectionism and fear of failure?
Okay, so I'm going to just put this out there. I think discipline is a symptom, not a problem that is a cause. Discipline is something that is symptomatic of usually a failure of process, a failure of structure, maybe not enough knowledge or understanding of what you're doing. Perfectionism can also be a symptom of something. Again, a lack of self-belief, maybe again a lack of structure or process. Trying to perfect an entry, you can't. There's different reasons for perfectionism. The market is an imperfect place. It's the worst place to be a perfectionist, basically. But discipline is usually, I know people who might come across as very ill-disciplined if you watch them, but actually they are not. They work within a structure, and that enables them to be able to trade well off the top of their head. They're very intuitive. Okay, it looks unstructured, but within that they are very disciplined. And then I know people who have a structured process, but their discipline goes out the window because there's a misalignment between who they are, between their risk size, between their purpose, all these things are out of line. The whole thing has to fit into one thing where, you have to understand why you're there. You have to understand the resources you have. Is the goal you're trying to achieve unrealistic? Are you sitting there with $10,000 of capital and you want to make $100,000 by the end of the year? Sorry, it's just, go to Vegas, play there. The market's in the wrong place to do that. There has to be a relationship between the resources you have and what you're trying to achieve. And there has to be a clarity of purpose that leads to what you're trying to achieve. If you don't have that, you're just going to be indisciplined. It's going to come out as a symptom.
And that answer was, I love that. We've got a few more. Some of them are a little bit redundant, so I'm going to go through some of these pretty quick here, Stephen, just to let everyone know that we are getting to their questions. And Ian J is saying strength, trade management, weakness, over trading after a certain point. I think we've discussed this quite a bit today. Anything maybe you want to add to Ian?
Everyone overtrades. I've not met the person who doesn't overtrade. Obviously, if you can do less of it, great. Again, it's usually from a lack of process or structure, if I'm honest. But if you can make it something that is just something that you occasionally do and not something that becomes a regular feature of your trading, again, you don't make money in the afternoon, don't trade it. It's just basic common sense.
So SCH says strengths, taking stop losses, weaknesses, taking targets. I fear profits will turn into losses.
Yeah.
I know I have to 3R, and then when 1R comes, I know I have a target to 3R, and then when 1R target comes, say to myself, what the heck am I doing? Get the money and take it off the table.
Yeah. Yeah, this is part of the learning process. You know, we keep coming back to this issue, and this is why this is so hard to we say this can't be taught, this must be learned, and you must do it. You know, but you have to put yourself out there. You have to step into this. Now, I'm going to, you know, what happens is, you know, you do it once or twice and it works. Then the next time you have this big profit that's 50%, 70% of the way towards target, and it goes all the way back and becomes a horrible loss. And you're like, I'm not going to do that again. You have to actually do that again. You have to actually accept, you know, as long as your process, you know, if you could actually have the ability to look back at your process over, say, 5 years and back test it, and you say, well, actually, doing that wins. There's going to be a lot of winners that become losers. There's going to be some losers that become winners. But overall, that makes me a great 20% return a year. I just then have to be able to do it. And I have to keep working at that. And you will get runs where it just won't work. And then you look back at your statistics and you say, actually, those runs that don't work are just normal. That's part of it, you know, because your system will click in. So it's almost learning to trust the system. Now, again, part of the problem is we see sometimes a mismatch between maybe people's lifestyle and what they're doing. So I don't know if you're trying to live off your trading. It's not something that I consider a great. It's one of those contextual things that's going to make succeeding at trading so much harder. You know, I tell people if you can have a second income, another income, anything that allows you to learn how to trade. Because as we say, you have to learn this job, and the learning is a multi-year process, and you're not going to be able to do it if you have to trade to put money on the table. You know, so even if you do have a nice reserve, I say still try not to live off that. Try and learn how to do it so that you're not desperate. So you can allow failure to happen a little bit, so you can learn from it, and you can allow yourself to go through periods where you bleed. But maybe that's part of your system, and you can allow yourself to have periods where good trades suddenly give back because they never reach target. That's why you'll never get the multi-baggers. The multi-baggers only come from the ones that you're allowed to let run. And then you sit there and it happens. You go, I could have made loads on that, but I didn't.
I love that answer. And, you know, I've talked about this actually quite a bit on the show lately. Everybody's got to put ego aside when you're learning how to trade. I was on the floor and I worked for 3 years while I was learning how to trade. And it was like, it's just what I had to do. You have to do what you have to do to survive. I always think about the advice that my dad gave me, and he's like, Anthony, if you want to do it, figure out a way how to do it. And we put so much pressure on ourselves to make that income as a trader that we lose sight of actually going through what Stephen said at the beginning. You can't be taught it, you have to learn it. And how long that takes, you just don't know. So why take yourself out of the game because you're not willing to do a little bit more to learn it? And that's just my 2 cents. I think that working while you're trading or doing whatever you can to stay in this game is so important. 2 more questions left, Stephen. We've only got a few minutes left, but I think both of these are really good. And this is something I want to talk about with you. Top Zani says, weakness, pressing more when losing. Strength, pressing less when winning.
Okay. So I guess we're getting back to the major point here. Can I just throw something out there a little bit? There's basically 2 ways to make money trading. There's no other way. There's 2 games we're trying to play. We're either trying to be like the player at a blackjack table, who is, you know, they're trying to turn an edge their way. The odds are against them, but they're trying to use skill and some sort of process to shift that edge in their way. And you tend to lose more than you win, but you tend to win much bigger. So I call that the fat tail approach. And then there's the other game, which is the mean reversion or accumulation approach, where you tend to win smaller, but when you have a loss come along, it's usually much bigger. And that would be what the player on the blackjack table is doing. It's the house game. It's the market making game. Now, you have to figure out whether you are trying to be a market maker. And a lot of people who do equities these days, you know, there aren't really any market makers. So you become part of this global market making process. You know, if we go back to futures, you know, there used to be a futures pit and all the market makers were down there, right? And they were doing it, you know, taking in lots of small wins. Occasionally you get run over, right? The guys playing on the outside of the pit were the players who would have lots of small losses and occasionally a big win. And but there's two different mindsets to that. Now, if you're doing the mean reversion approach, actually, sometimes you do let losers go a bit further and you do grab profits quite quickly. And it all depends about how often you win and how often you lose. Often when I'm talking about letting profits run, that's the other side. That's where you're the player. So it's really important to understand which side of the table you sit. Are you really part of the market making? Are you fulfilling that function? If so, actually, they tend to take profits quite quickly and they leave losses run a little bit more. It's almost how they do it, but they have a lot more profits. They might have 80 to 90% wins. On the other side, you may only have 20 to 30% wins or even lower. You know, some people are 5 to 10%, but then you have to let your profits run. So it's really important to know, and there is a hybrid. Everyone hybrids a little bit, by the way, if I'm going to be totally honest. Very few people are pure. But knowing which side of the table you are, what your game is, and then understanding the mathematical makeup of your win to loss ratio and how many wins you have and how big they are compared to your losses, and then fitting your game around that, making sure you're working within those rules. So I don't know if that was the answer you wanted, but it's really important to understand that it's not always sometimes just about letting wins run. I mean, that might sound a bit controversial to some people, but it's important to understand your game and the makeup of your game.
No, I thought that was perfect. And this is the last one we're going to take today, and it's from Rob Besh, and I think it's an important thing to discuss. He says, after a nice day or week of trading, my confidence becomes overwhelming to a degree that I think I can run the market, and then I give most of my profits back.
Yeah, let go, man. Got to learn to let go. And I know you want to learn to let go of the ego more than anything, and that is something you have to learn over time. You know, we all do that. You know, we feel like God when we made ridiculous amounts of money, and you know, none of us are God, and we know what happens to us when we, you know, when our head can't get through the door. You know, we've got that lost weight. You know, we're going to get our arse handed on the plate to us, basically. So it's something again which great traders practice, learning to let go of their ego. Not some of them won't trade till they feel ready to again, because it's just natural that, you know, you're going to feel overconfident. You know, it's like a boxer. If you step in the ring overconfident, you get beaten by a guy who's not as good as you. You know, because you're going to make errors. You're going to leave yourself open. You know, you're going to do silly things. It's something you have to work on. There's not a magic answer to that.
Yeah, I mean, Rob, I could share a personal experience with you about myself. After my best year of trading, I started off with my best first 2 weeks of the year in my career. And I'm thinking to myself, I'm going to kill it this year. That actually happened to be the only losing year I had in that decade. And it was because overconfidence. After that, I had my worst month of the year, and the rest of the year I chased it to get back, and I never got it back. And so I look at that time in my life and I say, every time I go on a good run, recognize that is that after you've been on that good run and you start to give some back, that you, be conscious of it, and, put a stop loss into yourself, almost like you would a trade. And I think that's something that I had to learn the hard way. And believe me, it was a tough time in my life, because I'm like, I go from counting the money to being like, wow, I can't believe I'm here again.
It's happened to me, and it's a soul destroying process. And, but what happens is you think, I know what's going on, and you don't start doing the homework that you need to do. You start getting lazy. You start it's like throwing chips around in the casino. It's almost like, I don't need to read the markets. Yeah, I know what's going to happen. I'm going to ignore what that person's saying, that my argument's wrong. And I became a dick for a while.
Yeah. Well, there's a difference between being confident and comfortable. I became comfortable. That's what happened with me. I'm like, I got this. I'm just going to make money now. And all of a sudden my confidence, I went from being a confident trader, doing what I was doing, to comfortable with a bit of arrogance, to now uncomfortable in everything. And it just totally threw me off. But everyone's saying, Stephanie came in and said, this is her favorite episode so far. I just want to throw that in there. And a lot of positive comments. And Steven, I got to tell you, like I said, I knew this was going to be great. But it came out even better with all of the great participation from all of you today. What can I say, Steven? Thank you so much for taking all these questions. Like I said from the beginning, when you do these live, it adds that additional element. And we've got a bunch of great people tuning in today and sharing some of their strengths and weaknesses and just good conversations with us. So thank you so much today for joining me on the show. Where can people go to learn more about you, your podcast, your website? Tell everybody where they should go.
So the Twitter handle is @AlphaMind101. And I've got a partner who's been on your show as well.
Yep.
He's at AlphaMind102, Mark Randall, who's an incredible coach as well. And we've got a podcast we do together, the Alpha Mind podcast. We have lots of guests on it from all different areas, but we talk about psychology, we talk about markets in lots of different ways. We've got some great guests coming up. This is the stuff that doesn't tend to get explored as much. You know, there's this preference for what's going to happen next. What's the Fed going to do? How the market's going to react to it? You know, what does this indicator mean? You know, to me, this is where the real money is made. You know, this is where the psychological side of it. So we talk about that all the time. So, and then we've got a website, alpha-mind.net, and the Alpha Mind blog. So there's various other resources as well.
Yeah, everybody definitely go and check out everything that Steven's got going on. Like I said from the beginning, that's one of the podcasts that I regularly tune into when I'm looking to get better at my Alpha Mind. This is about developing mental edge. And today, Steven, I mean, you did just such a fantastic job explaining all of these really difficult topics that are there that we all have to talk about and get over as traders. So once again, thank you so much, my friend, for joining me. And I hope you have a wonderful Christmas, New Year, and just a holiday season.
Oh, thank you. Thank you. Same to you. And, hopefully the Florida sunshine won't last too much longer.
I got to keep this tan going, man. I can't let it go. You got the London tan going on right now.
There is no tan in London.
Exactly.
For about an hour a year.
All right, my friend. Thank you so much. Everybody, thank you all for tuning in to the Futures Radio Show podcast. If you enjoyed today's show, give us a thumbs up and hit that like button and hit that subscribe button on YouTube if you're watching on YouTube, and never miss an episode of the Futures Radio Show live stream. If you didn't enjoy today's show, give us a thumbs down and put your reasons in the comments down below. You can follow me on Twitter at Anthony Crudele. Check me out on Instagram. Got a bunch of cool stuff there at Anthony C. Crudele. That's it for this week, everybody. I'll see you next week. See you guys.
Okay, we off?
Nope, we're not. Just drop out now, Steven. The software won't let me cancel it. See you guys.
Take care. Take care. Take care.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.